Hi, it's follow-up video time. Frequently asked questions about my main channel video on basically how I pissed away $400,000 because I didn't buy the commercial office next door. And there were, as expected, a lot of comments with this. A lot of people saying, oh, I didn't take this into account. I didn't take that into account. What does this mean? What does that mean? Why did you do it this way? Why didn't you? So I thought I'd do a frequently asked questions because some of them are legitimate questions. Now, some people were confused over why exactly in this, my mouse isn't working very good today, why this column here, okay, why I was doing like this cash thing. And like the whole idea was that I was trying to balance this side with the expenses on this side, because I know that the expenses would be much higher buying a place than over here, or potentially anyway. It gets a bit worse when you're like renting, like here, for example, $22,000 rent, and my outgoings are, still $5,000, so that's still $27,000, or this is $40,000 here, for example. But the whole idea was that I balanced both sides just to show that like the numbers at the end. Otherwise, none of this makes sense. So I said, because I saved the interest over here, $13,200 and $20,000, I now had that money available as cash. Okay, so that's why I just balanced these two sides here. And I just thought this was a reasonable way to look at it, to come out with a figure at the end. So hopefully that makes sense. Now, the biggest frequently asked questions was, Dave, this cash profit, you've just simply added them all up here to get you $208,000. If you invested this money, right? If you invested this money every year, this cash profit at the end of it, after expenses and everything else, then it'd be much greater than $208,000. Well, yeah, I probably should have mentioned that. That was a mistake. I should have specifically mentioned that. Well, maybe I did. I mentioned that I'm assuming that it's just being kept as cash profit and being stored away in a bank account, earning 0% interest. Why did I do that? Well, several reasons. Is that most business people, if you're smart, you're going to reinvest that money into your business, okay? And in my particular case, because I did take this path in life, so assuming these numbers are correct, right? They're not actually correct, but they just work out from the calculations over here, okay? What did I do with this money? Well, I hired David for a start, like full time. I think that was in 2017, I committed to having a full-time employee, for example. And that comes with, lots of expenses when you're hiring so it went into wages and stuff like that. So I reinvested back into the business. I bought more stock and all sorts of things. It depends on your business. You would have many different requirements of reinvesting back into your business. And of course, if you believe in your business and your business is proven to be working well, often your greatest investment return in percentage wise, is reinvesting in your own business. And realistically, that's what any smart person would have done. But also, you have to have a cash buffer in your business as well. If you're running a business and you have no cash savings, no cash buffer at all, then, well, you're a fool and you're going to come a gutser when something goes wrong. Like COVID comes along, for example, and like other many countless things come along and you can go, why? So this is why I simply put it into I just assumed it was cash savings at no interest rate whatsoever. Dave, you should have bought crypto back here in 2015. Well, I did. Technically, what I did with this money was not only invest in my own business by hiring someone and buying more stock and doing that sort of thing, because I can actually get, in my sort of business, buying and selling my multimeters, which is a big part of my income, that's actually a guaranteed profit, like assuming the sales don't dry up, right? Me buying more stock is like a guaranteed way to make X% return on my money. And it's much better than I'd get in any stock market or index fund return or anything like that. But realistically, I used this money to reinvest in my business, and also I took some as dividends, and I did, I improved my house, I did various other things, I made other investments outside of outside of the business, right? So yes, I did, right? And you can redo these calculations yourself. The whole idea of this spreadsheet was just to show like one way of looking at this. There's many different ways you can actually calculate and look at this. This is just the way that I happen to do it. And if you learn something from it, great. If you don't, if you think I'm doing it wrong, great. Also, do your own way of calculating this that's specific for your circumstances. So yeah, you could have, put this money in an index fund. Okay, but yeah, most businesses are going to reinvest it in their business. So you can't, realistically, I couldn't put any value on that. I couldn't say, oh, I'm going to get 10% per year or something like that. It's just like some things I won, some things I lost on. It's just impossible. That's why I simply left it as a cash profit thing. So yes, if you've got this money left over, you can invest it in whichever way you like. But you should also have a cash buffer as well. In fact, in my particular business, I like to leave at least $100,000 cash buffer. Okay, that's just, because big stock purchases come along. You have no idea how much I pay for my, I buy, 300, 500 multimeters at a time. That's actually very significant bulk expenses. And yeah, I like to try and keep at least $100,000 cash buffer in my business. And the next thing is, oh, Dave, this 4% interest rate. You hear, this is absolute bullshit. What are you talking about? Interest rates are 1%, they're 1.5%. Well, okay, let's talk about it. I had to pick something. Well, back in 2015, my interest rate was about 4%, okay? And my current home loan is about 2.9%. 2.9 or 2.95%. Oh, Dave, you're being ripped off. That's ridiculous. You got to understand, what you see and hear on the news about interest rates or what you might have in your home loan is not necessarily the interest rate you're going to get with the financial instruments that I'm talking about, with things like offset loans and redraw facilities and lines of credit and stuff like that. Yes, like here in Australia at the moment, I think technically the cheapest home loan possible is 1.95%. Okay, let's just round it to 2%. I don't even know if they're offering that anymore because there's really pressure for rates to go back up at the moment. And trust me, inflation's going to be a terrible thing. If you're not looking out for inflation over the next 5 years, you're going to come a gutser. Anyway, 2% home loan, okay? You might be able to get your 2% home loan for your home loan, but that's typically going to be principal and interest home loan. It's not going to be the one I've got with this offset home loan that I've got. That's effectively a line of credit type thing. I'll talk more about this in a minute. But this is like, you're going to pay more for these extra features, right? To get things like an offset home loan and to get an interest-only home loan, because I want that money sitting there readily available. I don't want to have to pay the interest and the principal. What that means, okay, let's say I own a home for $1 million and I get a line of credit on that house for or I've paid my money in and $800,000 is sitting in an offset account. If it's an interest-only loan, which mine is, then you if you've got the whole if you own your house and you've got the whole $800K sitting there, you pay no interest at all. There's no monthly repayments whatsoever. It can sit there for years, ready to go. So you can use it at a moment's notice to buy something like this office, to buy whatever it is you want to buy in life, okay? So that actually, those financial instruments actually will typically get a higher interest rate associated with them, okay? Especially an interest-only loan. Whereas in interest and principal, you have to pay down every month on the principal until it drops to zero. You will get a lower home loan interest rate for a principal and interest loan, but that means that you've actually got to pay off something every month, even if you're not using it, and then it just whittles down and down and down and down and down and down until not only do you have that monthly payment thing, but then your line of credit gets smaller and smaller and smaller and smaller. So you're going to pay more for that. So at the moment, I'm paying 2.95%. I could potentially haggle that down a little bit, but not a huge amount, especially when at the moment it's money's just sitting there. They're not making any money from me. The banks are not making any money from me because I'm not making any repayments. It's just sitting there as a financial instrument that I can use. So yeah, but realistically, okay, it's about 3%. at the moment, okay? If I bought another office next door in this business park or whatever, I'd be paying 3% interest rate. So my 4 was actually correct at the time, and I just assumed 4, right, for the whole thing. So just be aware that those advertised interest rates you hear about aren't for all types of financial instruments. They vary, and the more flexible stuff, which is what I'm talking about, typically will cost you more. But hey, that's just here in Australia. If you can get, your 1.5% interest rate to buy your commercial property, great, go for it. Awesome, right? But I wanted to point out that there can be a big difference. Next one is, Dave, the only reason you would have made $400,000 here is because of the capital gain, the appreciation in the property here. Yeah, a lot of these people did not watch the end of my video where I actually entered the number here, 330,000. So after 10 years, even after 10 years, I assumed that it didn't go up at all. It didn't appreciate in value at all. And I was still, I think, $30,000 ahead or something like that. And I have 125 square meters. And I have the future potential for it to go up in the future. And yes, it could have gone down. I explained that in the video, how commercial property often just sits there. In fact, this office here that I own and this business park and the one next door I was going to buy in stayed flat for like 5 years, just sat there, did absolutely nothing for 5 years. Even 10 years is not uncommon for a commercial property like this. So yeah, but I was just showing what realistically would have happened. And it just so happened that, I would have timed that nicely if I bought it at the time. And sure enough, the calculations would have been different if there was already a boom before that and stayed flat. Yes, I agree, the calculations would have come out different, but I was just showing that in this particular case, I would have got lucky, in quote marks. But the thing is, when you buy a property like this, you're buying for the long term. If you think your business is going to only last 5 years, or you're going to move overseas in 5 years' time or something like that, like buying might actually be the wrong choice for you. But when you buy a property like this, you have to assume that you're, like in my particular case, right, I'm a one-man band business. I plan to be a one-man band business for the rest of my life at a minimum, right? So I know I was going to need this office for a long time. That's why I actually purchased this one back in 2011 instead of renting. I knew that I was going to have it for the long term, and so therefore buying was the correct decision. And if you're buying for those reasons, it doesn't matter really what the market cycle is at that time. And a lot of people said, you can only realize that if you sell it. I never plan on selling this place. I plan on keeping this forever. If I don't need it, I'll rent it out. And in the future, my kids can use it, whatever, like flexibility. I don't plan on doing this. So people who mentioned capital gains tax and stuff like that, nope, I don't plan on selling it. Okay, some people wanted me to explain what an offset loan is. And sorry, this is probably an Australian, it might be an Australian specific thing. A lot of people say that this doesn't exist in America. It could also be called an equity loan or a line of credit loan, but technically a bit different. I'll explain how offset loans here work here in Australia. There's basically two different types of mortgages here in Australia. There's offset loans and there's redraw facility loans, or there's basic just a loan where you can't, no matter how much money you pour into it, the principal just comes down, but you can't ever withdraw that money, and you're dumb if you get that type of loan. And that might be one of the 1.95% loans, for example. Or the next cheapest loan is probably the redraw facility loan. Okay, so let me explain a redraw facility loan. You basically have just the one loan account like this, and let's say it's $1 million like this, okay? And you're paying your X amount per month, right? And which is your minimum repayment. Now, if you pay double your minimum repayment, okay, then you're paying off this amount, and then you've got this extra in here, okay? They do keep track of how much extra you pay back in, and you can actually redraw that percentage of money back out, okay? But the problem with these redraw loans is that they typically come with red tape. The bank controls when, how, and why you can withdraw that money. Well, it depends on the, the terms and conditions, but usually, you might have to fill in a form, you might have to do whatever to actually get that money back out. It's a bit of a hassle, right? And the bank, there might be terms and conditions in there. Bank says, no, you can't do that. Nah, the financial markets change. Nah, we're not going to let you take that back out or whatever. Okay, redraw loans. So that's a basic redraw loan, and that's not as flexible as the offset loan that I'm talking about here. So let me explain the offset loan. The offset loan, you still have your same loan here, okay? You've got your $1 million here, but you've actually got another physical bank account, which is just like a regular bank account. In fact, you can even get like a debit card with it, like a Visa card, a Visa debit card or whatever, and you can spend this money, right? So what happens here is that, okay, your minimum repayment goes into your loan, okay? So each month you've got, your $1,000 minimum per month or whatever. Now the extra stuff, you don't want to put it into the loan, because if you put it into the loan, then you can actually I've got a current one where I've actually got a redraw facility on this loan as well. So I can actually choose between redrawing from the loan over here, so I can get this out of here, or I can put, but it's better for me not to put money into the loan. It's better to put that extra I'm going to pay off per month, and you should pay extra per month, okay? It goes into the offset account here, and that sits as cash in that bank account that I can do absolutely anything I like with. This is how I purchased this office here back in 2010 for $195,000. I was, we were paying for many, many years, we were paying like mad into our home loan, and it went into this offset account, and I said one day, I need an office, right? When I got retrenched from Altium, and we went, I don't want to work out of the garage anymore. We should buy an office because it was better than renting, okay? So what I did is I simply went, I found an office that I liked, this one here, made an offer on it, accepted, and I simply withdrew that money straight out of that offset loan, no question. The bank didn't even know nor care, nor do I have to ask their permission to withdraw that money for anything. I could have gone and bought a Lamborghini and booze and hookers and whatever you want to do with this. You can do whatever you want with it, or you can use it as a business loan, as you put money into here, and then you can withdraw that if your business is in trouble, you got hard times, something's gone wrong. You can actually take money back out of there to do anything you want with it. Use it for your business or use it for your personal, improve your house, do whatever. Loan a mate some money. You can do whatever you want. You're your own bank because you've got this bank account that you've put money in that you can withdraw for anything. So how is this different from a regular bank account? Well, it's a little bit different in that every month, okay, they calculate the interest every month, not based on this value here in your loan, but what it is this value in your loan minus subtract the balance in this loan. So let's say you have 200,000 on your loan here, okay, 200K, but you've paid in an extra 100K into here. Then when this month, you're only going to pay interest on 200 minus 100. You're only going to pay interest on 100K like that. And that's why putting money into this offset account, you become your own bank, as well as getting the compounded reduction in the interest rate by doing that. So, and quite frankly, if you're running a business, for example, and you've got a loan like this, and you've got like a business bank account like this, okay, why have money build up in your business bank account and, well, you're not getting any interest on it or whatever? You might as well stick it over into here because you can withdraw it anytime you like. It's just an accounting thing. Your accountant might charge you a bit more because there's a bit more, tracking involved or something, but put your excess cash into here, and it works like a normal bank account, but it reduces your principal effectively from 200 to 100K. It's really simple and obvious. So it's different to just a regular bank account like this because it's tied. These two things are tied together, and the interest is calculated on this one, subtracted from this one here. Got it? So sorry if that's not available in your country. It's just a very handy thing. But as I said, you will pay typically pay more for a home loan that has these kind of features in it. And the one, and in particular, the loan that I've got. So what I've got at the moment for my house, okay, my house is worth X amount. Who knows what it is this week in Sydney? It's going like 50 grand a month or whatever. Okay, but I've actually I have that value, right? That equity. Let's just say it's $1 million, right? I have that split right down the middle into two separate accounts like this. Well, 1 and 2. And I can do whatever I want with it. What happened to my mouse there? I think I accidentally pushed a button. So this will have 500K and this will have 500K in it like this. And if there's an office that I want to buy for 500K, I'll just take it out of one of these. There's really no difference having them separate. The reason I have them separate is just from an accounting point of view. It means that I can just do different things and just keep the accounts separate. You can just have one, but it's it's just nice to have these separate ones so that all of your accounts are just separate and you can just give it to your accountant and it's all just done. You don't have to dick around with, this transaction here was for this one and this transaction was for this one, for this thing over here or whatever. But so this could be called a line of credit loan, could be called an equity loan or something like that in your particular country, however it works. I believe there's no such thing as an offset loan in the US. That's what people seem to be telling me. But anyway, you can, once you build up that value, this is how, over here, this is how I can access this 700,000 over here, right? This is how I can access this, is by a line of credit loan. Like, why doesn't it resizes every time I go back? That's just dumb. This is a Drawboard PDF, excellent program, but they changed the user interface recently. I don't like some of the changes. Anyway, so you can get a line of credit loan like this on your house or your commercial property or something like this. I've never actually done it for this. This office that I'm in at the moment is worth X amount in the current market. I could go get a line of credit on this property because I own this. I paid cash from my home loan offset account over here. So from day one, I own this. I've got the title for this. It's sitting in the safe at my solicitor's office and has done since 2011. I own the title to this lab because I simply extracted money from here and bought it outright. And I could then go get a line of credit on this place to then go do something else with. And then this is how you get ahead. Anyway, there you go. That's a frequently asked questions on that. There's probably more. But yeah, I mean, as I said, there's many different ways you can look at this. And this is just one way. And I had to simplify it with the cash thing and the interest thing and everything else. But by all means, if you don't like this, the way I've done it, share the way you do it, would calculate something like this. You can't just say, I should have invested this in Bitcoin over here. Well, yeah, I've actually made a fair bit on cryptos. So, yeah. So for me, this path in life actually wasn't that bad. And in the end, it's a bit clickbaity with the 400K and stuff like that. But, that's the numbers that sort of pop out. You can't just assume that your investments are going to work out or whatever, because as I said, most people would reinvest that back in the business, which they actually believe in. Of course, if you start a business, you've got to believe in the business. Otherwise, why are you starting it? So yeah, you'd typically put money back into it. But yeah, always remember, have that cash buffer. Anyway, there you go. It's probably made things worse. Whatever. Catch you next time.